Good morning, trading world. It is March 13th, 2023, 8:51 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. This is a very dangerous time in the markets right now. I explained why the chart and levels are so cloudy right now back on the March 2nd pre-market outlook. Nothing has changed. We are still very much in these cloudy range consolidations on the larger time frames. Stick to extremes, whether you adhere to the main channels I give every day or whatever your strategy is. Use nothing less than the 4-hour chart time frame. And actually the key or the time frame in power right now, you would do even much better focusing in on the weekly. While this is a very dangerous time, fortune also favors the bold. The swings will be big and swift. If you can be quick, reactive, nimble enough to change with the tide, this could be really profitable. If you were not good at seeing intraday swings before, this is definitely not for you. Pick a side, hopefully short, and stay until the overall tide changes. Rallies are going to happen seemingly all of a sudden, then fading just as fast. Last December, I talked about trade being stuck in a volatility box where trade moves swiftly and abruptly inside this box. We are back in it now, and the same rules apply. Stick to extremes, divide the box into thirds, and use the upper third to short and the lower third to go long if you dare. The upper edge of the box on the SPY is around 387. The lower edge of the box is around 376. Because of this vol box, we can see some decent sized trend days back to back, which is going to be really good for these $10 wide VIX spreads bought months ago. The weekly outlook is bullish, closing above the 385.91 with a possible retracement of around 396 area. We do have harmony between the technical side, which is bullish, and the quant side, which is also bullish. And normally I have 90 to 95% faith in these projections when we have harmony between the technical and quant side. Right now, because of the speed and volatility of the market, it is down to 60-65%. And I am living swing to swing or moment to moment in the market. I do believe there are going to be some bargains to be bought in the financial sector, both short term and long term. Short term, for the entire market, I see bigger bounce to take advantage of these bargains, or maybe starting sometime around or after the 20th of the month. Let's get to the key levels to watch today. And actually, before I get to the key levels to watch today, let me go back and visually show the volatility box and how it looked back in December of 22. I'm going to bring up a 360-day hourly chart. And if we go back to this period here, December 15th, I am going to highlight that area from December 15th all the way to January 6th. If you can see this now, this is pretty much the volatility box that I was speaking of. And let me get some drawing tools up here. Alright, I said around the 387 area, so that's just below here. And if you can see how long we spent in this box and how fast and abrupt trade was in this box, bouncing from the lower end to the top end, back down to the lower end, up, down, and we just bounced and ricocheted off of the box for a long time. This is what we're back into, and this is why I say take this box, divide it into thirds, use the upper third to get short and the lower third to get long if you dare. This is what we're in for right now. It is not going to be easy, but if you're prepared, it will be really profitable. So again, I can't stress it enough. In preparing for this box, if you are really adept at intraday swings, again, find shorts in the upper third of the box, find longs in the lower third of the box. If you are not good at seeing intraday swings, stick to going short in the upper third of the box, taking most of your profit middle to lower third and leaving runners. Or do as I'm doing right now. There's not a short position that I am closing right now. All of the short positions that I take, I am merely rolling profit out of and keeping them on the board as kind of little lottery tickets, thinking that if I roll it down far enough and take out enough profit, that eventually the market will come back and hit it, especially if it's inside the box. So that's what I'm doing on all my short side trades, which has been very good for me in times of volatility like these. All right, let's get to the key levels to watch for today. All right, here we are back with the key levels to watch for today. On the resistance side, we have the 389 to the 390 area, which is going to be really pertinent whether we reject or how many times we reject off of this area. That is our jack resistance level. Then we have our queen resistance at 391 to the 393 area, which is also going to be pertinent today. And lastly, we have the king resistance area, 394 to 398. On the support side, we have our jack resistance area, 384 to the 383 area. Queen support 382 to the 381 area, and then king support 380 to the 379 area. The main thesis for today is bullish, closing above the 385.91 with a projected target high of between 386 and 393. Alternate thesis is bearish, closing below 385.91 with a projected target low of between 384 and 380. The main channel we're in is from 397 down to 379. The main channel below is 379 all the way down to 364. Last week, market strengthened, bred a gap up and faded off the open. Briefly found a range bottom, bounced strongly for another brief moment, and then fell to an even lower range bottom. I expect strength to open stronger today. However, the high time frame charts are still in their rest area, meaning big, dangerous consolidation. We do have harmony between the technical side, which is bullish, and the quant side, which is bullish as well. This brings us into the scenarios of the day. All right, our first scenario and most probable could be our trend day down, meaning we open gap down, start with a push back toward the previous close represented by the blue line, find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around the possible queen or king support area. Not always, but a good amount of times the second half of the day we come out looking to continue the primary trend of the morning, which would be down, but it often turns into a head fake, and we usually get a rally at some point into the close. When we get elevated volatility, especially getting up around the 29-30 area, I usually say throw out the day types, because it speeds things up to a point in which ranges happen so big, so fast, that it seems like we get 2 day types in one day. We could be looking at a trend down to start the day, and then all of a sudden you feel like you're in a trend up. It's just volatility speeding things up. So definitely be prepared for that. The vice versa scenario is definitely real today, where we could change or go from a trend day down to the first part being a trend day up, or the latter part being a trend day up. So we could definitely see something like this take effect, where we bounce up, down, and get our trend day up, and have something to that effect. So be very, very careful. All right, our next scenario is going to be our expanded range day structure. We begin the day with a continued push into lower parts of the vol box slash our larger time frame consolidation. At some point today, we will get a decent push up, only to roll back over later in the overnight session. So please be aware and be careful. That's why I say I'm living swing to swing, moment to moment. All right. Our last scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. Be very careful. Again, the vice versa alert is on for each of these scenarios, even though I didn't do one for the expanded range day. We have to be careful, because we could get something that looks this way, vice versa alert, on the rounded reversal day type structure, which would have us take off to the upside here, find midday chop somewhere around the jack queen or king resistance area, and then find ourselves swinging back down with the same amount of force or energy that we went up with during the first part of the morning. Again, it is in your best interest to be on alert and on top of your risk. Again, if you are not good or we're not good at intraday swings, this is not the time to try your hand at it now, because these swings are going to be very large, very swift, very dangerous. I've given a blueprint to survive and thrive in these times. I don't see this lasting too much longer. Maybe another week or two before it calms down again and we seemingly forget about this briefly before we're wrapped back up in it even stronger later in the year. I was going to introduce something. Those of you that followed me for a while, I usually do something to kind of keep up with this, where I do a comparative study. Actually, let me find it right now. Give me just a moment. This is a setup that I usually bring out during times like these where volatility is really hostile. It's a comparative study between the red being the 9-day VIX. We have the gold being the spot VIX, and the 3-month and 6-month VIX. And whenever we get those where the 9-day VIX is up above everything else, we know we're living in a very dangerous time. And that's right now. As you can see, where the 9-month VIX was above everything else. Try to bring it into place here. But I think this is where it changes over. It's not available just yet. This won't be available until the open, but this is something that I just kind of use to pay attention to where things are headed. And the moment we get the 9-month VIX breaking down back below the other VIX measures is where that temporary bottom will be found. So this again is just a tool that I use to kind of keep an eye on these volatile times like this. As I close out each video, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to your account size. I hope this helps. Please be safe. Be very careful. Wishing you a positive trading day. Let's go out and make it a great one.